Right now, the dollar is where it was in 2015. It's almost exactly where it was, right around 104, somewhere in that neighborhood. And that's when gold made its low. Now, since then, the dollar is up roughly 5% from that point, and gold has doubled. Now, what happens if the dollar gets clobbered and starts to fall fast? You'll see gold and silver slingshot. I guess I would leave people with two things. One,
Get ready to witness the seismic potential of the global economy, because Andy Schectman just ignited a firestorm of insight. Imagine this. While the dollar has barely budged since 2015, gold has soared to incredible heights, doubling its value. But here's the kicker. If the dollar takes a nosedive, and trust me, it's a matter of when, not if, get ready for gold and silver to skyrocket into the stratosphere. Buckle up, because in today's video, we're about to unravel the explosive dynamics driving the market. So don't go anywhere, keep watching till the end.
So basically what you're talking about is all of these currencies are, see, everyone fixates on the common settlement currency, and that will happen. There will be one, and it will be tied to gold some way or somehow, because it is the only other tier one asset, and all of these central banks are buying it. But what you're seeing here is all of the BRICS countries will have a gateway to not use SWIFT. They can trade with one another for oil or for energy or for rare earth metals or for wheat or for soybeans or whatever the hell it is. Like, Brazil is the second largest exporter of corn in the world, and they're selling their corn and their soybeans to China for yuan, which is then immediately convertible into gold on the Shanghai Gold Exchange. And they will use these bridge systems to trade their currencies, whether it be digital real or digital yuan, into the commodities or whatever it is that they're buying, and then they will sidestep the SWIFT system and settle outside the dollar. So all of this settlement being done outside the dollar has tremendous impact on the value of the dollar. And then instead of buying treasuries with all of their excess cash, as they've done for 50 years, they will buy gold, which they've been doing. And you can see that treasury holdings of these countries is falling off a cliff. Gold issuance is going straight to the moon, and they're using the suppression of the Western market to do this. But understand that if you go back for 25 years, gold, if you take the total gain and divide it by 25, it has averaged almost 8% per year without the geopolitical risk, without the sanction or confiscation risk, without the default risk. And when you look at the performance of the bond market, it's been half of that or less, much less. And then, of course, last year being the most volatile year for the 10-year Treasury ever, where in 45 years it was more volatile than the price of gold. So what these countries are doing is trading with one another through a new system. It was first the M bridge, but now they're talking using that technology for a BRICS bridge, where all of these countries can trade with one another in their local currencies, put the excess reserves into gold instead of U.S. treasuries. And if you realize that has a tremendous impact, not only on the settlement status of the dollar, but the reserve status, because the bond market, there are no buyers at these levels. They'll have to jack rates way up to get people to buy it. And if not, the Federal Reserve will be the buyer of last resort, which is monetization of the bond market, which is the road to hyperinflation. And so this is a way to have a tremendous and profound impact on the dollar, even before they issue a standard settlement currency. But I also want to say one other thing. People talk about the dollar has to go to get crushed before gold and silver go higher. Now, I don't have the numbers in front of me with silver, but with gold, right now, the dollar is where it was in 2015. It's almost exactly where it was, right around 104, somewhere in that neighborhood. And that's when gold made its low. Now, since then, the dollar is up roughly 5% from that point, and gold has doubled. So as the dollar has only, gone up 5%, gold has doubled. Now, what happens if the dollar gets clobbered and starts to fall fast? You'll see gold and silver slingshot. And this is why you're seeing 55% of all the COMEX gold taken off the market since February of 2021. And I guess I would leave people with two things. One, we've seen gold rise in our currency despite positive real rates, even though the information on the rates is a lie, as is, the inflation numbers are a lie. But we'll use the CPI numbers and say 5% minus the 3% inflation puts it at a 2% real rate. When gold is rising in the face of positive real rates, that is saying that you keep rates here or they go higher, your government's going to have real problems with debt if rates remain positive. But I want people to know all of these things that we are doing, that the hegemony of the US dollar is based upon confidence. And what will this empire be when when the world loses confidence with this system? And I would argue in many respects they already have. So this is a trust-based, confidence-based system. When you go around stealing people's reserves or assets and then actually having Janet Yellen in Brazil speaking, urging the European Union and the U.S. to not just use the sanctioned assets, hold them, but to actually use them to rebuild the Ukraine. It's a joke. It's absolutely a joke. And there is no coincidence that you had BRICS calling in Brazil, President of Brazil calling for a BRICS meeting here in Brazil right away to talk about global finances, right after our knucklehead Secretary of Treasury is telling the world that these assets need to be confiscated. Confiscated, she says. I mean, it's about the dumbest thing that you could do. And, at least we have Nancy Pelosi looking out for us. She bought 1.25 million worth of Palo Alto Networks calls for $1.25 million. And of course, it's gone way up. Obviously it's just a coincidence. And it's just a coincidence that you see, Jamie Dimon, who bought 1.235 million shares in the open market of JP Morgan from 2009 to 2016. When the market bottomed, last week he just sold almost 822,000 shares at the top for 150 million. Is it impeccable timing? Is it impeccable timing when Bezos and Zuckerberg and all of these insiders are selling and building bunkers? Is all of this stuff coincidental? And I would say it's not, and not even a little bit. And then you see the information coming out of the Bureau of Labor Statistics. For 4 months in a row, they've revised down the consumer confidence numbers. But the last time, the January numbers were really high, and then the market went nuts on it, right? And then all of a sudden they revise it down to the biggest revision downward since 2022, and it is a massive revision downward. And we're revising them downward. They say it a month or two after the fact, after the economic impact is severe upward, like the market goes nuts because evidently the consumer confidence is through the roof, but now it's actually negative. Sorry, we were wrong. Point I'm getting at is we're being lied to by the Bureau of Labor Statistics. We're being lied to by our politicians. We're being lied to all over the place. And what is happening in BRICS, these people who are dollar bulls, who live on recency bias and normalcy bias, are in for a very, very big rude awakening. And as China continues to gobble up the world, they just bought Yintai Gold on Sunday, a Canadian gold exploration company. Yintai Gold just bought Osino Resources, exploration company in Canada, for $273 million in cash. They're doing this all over the place. Last year, they were buying up all of the copper companies in Canada. They're buying the farmland in the United States. They're buying gold and silver mines all around Central America, South America, and Africa, and oil refineries and oil reserves, and striking deals to build all of that stuff, to bring those natural resources to the market and industrialize these countries. They are building a very, very formidable infrastructure. And people need to understand that this is not stopping, it is accelerating. It is really, really accelerating. And I will just simply leave everyone with that one thought that we've said over and over and over and over again, and that is 200 meetings between now and October, all BRICS related, in Russia, the big one in October, an election in November, and 12 million people in this country illegally right now. If 1/10 of 1% want to do harm to this country, that's 12,000 people. This is something that should be taken very seriously. This is why you buy gold and silver. It is not to get rich. It is because the things that are confronting us in this country and outside this country are things that none of us have had to worry about our entire lives. And now it's time to get real.
And that wraps up another mind-blowing exploration of the global economy here on our channel. If you're as fired up as we are about the insights shared by Andy Schectman, don't forget to show your support by hitting that like button, subscribing, and ringing the bell to stay ahead of the curve with our latest videos. But wait, the conversation doesn't end here. We want to hear from you. Share your thoughts, questions, or even your own predictions in the comments below. After all, knowledge thrives in the exchange of ideas. Until next time, keep your eyes on the markets, your finger on the pulse, and remember, The journey to financial understanding is a marathon, not a sprint. Here's to your prosperity. Stay sharp, stay informed, and we'll catch you in the next video.